on to what I call the compensation management plan. So how do we pattern and how do we structure it? I've told you, that you must ingeniously manage both the base pay and the variable pay. There are several reasons why you do this. Sometimes it's for tax management, because if you don't manage your compensation very well, your staff may be well paid more than competitor, but they may be going home with less than competition. This is not tax evasion. Tax management, I'm saying here is not you are avoiding tax. No, you're managing it in line with the law. So you must know how to structure both base pay and the variable pay. For a small organization, we find that in most cases, even the compensation management plan is left to finance department. And so some HR people and admin people in small organizations never have anything to do with this compensation management plan. But in big organizations, compensation management plan, just like compensation and rewards, is a specialty of HR. So I've said you must creatively manage your base pay and your variable pay components. If you want to have sustainable spikes of engagement and of commitment at work, play around with your variable pay very well. It may be that you've structured to pay those variable pay at certain times. You determine to pay some as bulk at certain times. It keeps it sustains commitment, while it may also help you manage some aspect of tax if it's well done. For instance, you may determine to also help cash flow for organization. You may tell all the staff in your organization that you will pay them their housing allowance in bulk, but it will not be for everyone at once. So people, because not everyone pays their rent, house rents at the same time. So while you are also planning in the HR, staff welfare and admin sector of your role, you will also have planned that, look, let me know when you pay your house rent, so as to structure the variable pay for the housing rent around that period. So if I pay my housing in February, you just pay me along with my December salary, the bulk pay for my for my housing. So if, for instance, there are 3 people, those people are paid there. If some are also paid in February, March, okay, we plan their own housing also to be paid along with those months. And so I'm saying variable pay can be used in such a way, that you can be creative. I've just talked about that of the housing. You can look at all the things. I've talked about variable pay also in terms of using it to improve performance by putting particular percentage of the pay that has been approved. The full approved sum will go for those who exceed performance. But part pay of that variable pay that has been approved in your budget, we only go to those who met even the standard. And for those who didn't meet the standard, I won't give them the variable pay. So at the end of the day, I may not finish my portion of variable pay in my budget. That's also cost saving. But I don't want to just to save cost, because that's not my intention in terms of their pay, because I'm approved. I want to move all of them to exceeding performance so that I will give them their variable pay. So, and I make it much more of a motivating thing for them. Don't forget the guiding principles in doing your commission plan, commission management plan. I've said there must be internal and external equity. Internal means you are paying people fairly, just and all. External means vis-a-vis your comparator in the industry, your competitors in the industry. You are equitable. Vis-a-vis also the national inflation, based on your COLA, cost of living adjustment, you are equitable. That's external. Internal is what you can manage. Managers to managers, they understand why the other person is earning more than me. It is based on variable pay. But based on base pay, they know that they are earning the same thing. They know that they have the same perquisites of office. However, benefits may differ, and everyone in similar roles will understand why it differs. That's where transparency comes in. Benefits may differ because maybe it's a sales attached role where they need vehicle to go around. So a person that sits in office may not have those vehicles. So it's not just because you're a manager in the organization, that's why everyone will have a vehicle. No. So, and this is made clear to everyone. Some benefits are tied to roles. Then one other guiding principle for your commission management plan is that it must be affordable. You can't just look at what competition is doing, but your own entire profits cannot carry it. Let it be affordable. Once you do what is affordable, fair and just, and it is transparent to everyone, I think your staff will say you've tried. It must not only be affordable, it must be sustainable. Something that you can continue, not just that you improve their salaries this year and next year you cannot continue, because it's not a sustainable growth pattern. It must be sustainable. It must not only be sustainable, it must bring about sustainability to the business. That is, if we do it this way, the improvements to the business on the long run will be guaranteed. So there is also, I've said, there's individual under equity, because internal and external equity is broad. Under internal equity, there must be individual equity. That's where I said there must not be nepotism, where you use the power of office, the power of might to overall certain individuals and not give them their full pay, while you're giving others their full pay because you like them, because they are in your good books, because they're relatives. There's also process equity. The way you go about things should, the same process for achieving the same, ends will be fair when it comes to payment, when it comes to compensation. As I've said here, there must be maximum use of financial resources. Maximum use, maximize it. Some compensation, we use the notch system. Some other commissions use the range system. The range and the band system is from the notch system. Okay, so what we are saying is you must maximally look at what plays well for you. In the public sector, government services, the one they use in most cases is the notch system. And that's why you have level 1, level 2, level 3. You have all those grade levels and all that. The notch system. And the notch system in most cases is used for very large corporations and enterprise. But the band system is used more in the private sector. The band system focuses more on rewarding value. So it's not everyone is on grade level 1, step 2, grade level 3, step 4. That is the notch system, which I said is used most often in the government parastatals and the public sector. But in the band system, you can just find that band 1 is from 3,000 naira to 4,000 naira. Band 2 is from 3,700 to 7,800. Band 3 is from 7,000 to, you find that there's an overlap. There's an overlap. So you may find out, therefore, that a person, okay, who is a manager 1, okay, and has almost gotten to the end of the movement based on increment and increment, maybe earning the same thing as a new manager who is on band 2, who just came in because of the overlap. If the old manager has entered into the region of overlap and the new manager begins in the region of overlap, you may find that they may be earning the same thing, even though they are on different job grades. So you must maximize all these resources, learn how it works and all that. And also there are compliance required of any good compensation management plan: compliance issues, legal issues, regulation issues, particularly with regards to statutory payments. I told you about the statutory payments in terms of group life yesterday. Okay, or the last time we did this session. There are some statutory payments also, in pension. In Nigeria, the pension is 18% to staff, isn't it?
Yes, sir.
Okay, and how is it? 10
from
from company, then 8%
8 from
self-contributory from the staff. Okay, so if there's a short pay with regards, and if there's no remittance with regards, we are contravening the law. So you as the HR person, you need to parley with your finance person to ensure that this is done, particularly the areas that has to do compliance with law and regulation. Some companies, particularly private enterprises, they use money meant to be paid with all this statutory compliance finance aids. They use it as other people's money to run the business, and they don't pay the money to the government coffers. It is illegal, and it can cost the company a lot more because there's a penalty. There's a penalty, and it can result into legal suits. So another aspect, of compensation management plan that you will look at, is whatever you want to do. Look at administrative efficiency, the ease of administrating the type of maybe the compensation management plan you want to do. How easy is it for you? How flexible? How cost effective? You must look at this. For very large organizations like government, the most efficient and the easiest compensation administration is to use that notch or level compensation plan. It's the easiest because you are dealing with thousands of people. So just put all of them on all that came in this year, put them on grade level 8, step 2. If they are 2 years, move them to step 3. If they are 2 years, again, it is easier. But in that is why also the performance management within government enterprises that use that system, the performance management is a bit weak. And because of that, major impact of individuals are not seen. Because they just know that just wait 2 years, they will promote you. Okay. But there are some other organizations that use the notch or level system and still they achieve strong performance management. And that's, for instance, in parastatals of government that are given autonomy to act almost as private enterprises. I know of some in the state where we are in. Okay, and so they adopted a lot of practice of the private sector in terms of reward, in terms of performance management and all that. And that's why they are not only self-sustaining, but also, parastatals that have been distinguished in terms of impact in the state. All right. So have you learned about the compensations management plan now?